The recent statistics coming out of the housing market in US does not look good. As a home buyer or investor, you should be really careful about this market in the upcoming months. Analysts say that they have never seen anything like the current scenario till date. Now what does that mean? Is a housing market crash around the corner? We all know about the great American dream. A white picket fenced home and a great yard is never an outdated idea. The country has a booming and live housing market all throughout the year. The average home ownership rate in US is more than 60% every year. Such a big market is at crossroads these days. The US housing market is the new hot news. There is a huge makeover coming in for the US housing market. The main trigger point was, of course, the pandemic. The year 2020 was particularly challenging for the entire world. Many homeowners who were in their mortgage cycles were having a tough time. So the government and private sector put forward several forbearance plans to ease the pain of homeowners. By this, the mortgage service or lender allows the buyer to pause or reduce the mortgage payments for a limited time. This will help them buy more time and be prepared for the future payments. But this does not mean that the payments are forgiven or erased. It is added back to the loan in small amounts or added to the end of the cycle. In the pandemic-related forbearance plans, the payments were delayed for as long as 18 months. As a result of forbearance, there were very less or minimal number of foreclosures happening in the market. As we know, foreclosures are done only when the mortgage payments are missed and the lender would have to forcibly sell the property to recover that money. However, now that the pandemic is almost coming to an end, these helping schemes are slowly pulled away from the market. There is no more support from the government or the private sector. At the same time, the economy has not bounced back properly. With no forbearance plans in place, a lot of borrowers have defaulted. People have not come back to their normal lives and jobs. Their financial instability is not solved yet, and they are expected to roll back into their regular mortgage payment schedules no matter what. It is obvious that the number of defaults are supposed to increase. It has increased and now the lenders are forced to go into foreclosure procedures. What we see now in the housing market is probably rare. Foreclosures are at its highest numbers as pandemic bailouts come to an end. Mortgage lenders have started the foreclosure process on 25,209 properties in this third quarter. This is a 32% increase from the second quarter. And if we talk on a yearly basis, this is 67% increase from the third quarter of last year. This is surely a distress situation. Many argue that there is nothing to be worried about the condition, as the percentages look like a steep increase only because the numbers were so low in the last quarters due to the full enforcement of forbearance plans. However, things might not be that shallow. So now many of the states in US are having high number of foreclosures, which is really unfortunate. Texas and California is in the top of the chart with more than 2,500 foreclosures happening. In the start of 2021, there was a high demand for homes. This was caused by lockdown, where people wanted to shift a lot and wanting to leave populated areas. So till June 2021, a lot of home sales happened and at least 50% of them fetched a price higher than the asking price. Distressed sales were at 17.2%, which was a record high. The demand has reduced now, and so the housing market is slowing down. With so many homes coming back to market and no purchasing power for citizens, there is nothing much happening. Then another news hit the market. Zillow has stopped buying homes. Zillow, the billion-dollar online real estate marketplace, is very famous for its estimates. Zillow estimates the value of a home based on the neighborhood sales prices and based on other publicly available information in the market. In the last few months, Zillow has been buying and selling thousands of houses through their iBuying program. They spot homes in areas where prices are increasing. Zillow will buy homes there and sell them at very high prices. Zillow has been doing this home flipping for huge profits, and yet they have decided to stop buying homes. Zillow has told that they will not be buying homes until the end of this year. That's a considerably long period for a thriving company like Zillow. Now what does that indicate? Well, many experts say that this is definitely a sign of housing market of US cooling off. It also indicates that Zillow might have bought way too many homes which has no market now. No demand and no buyers makes them take this drastic decision to halt buying homes for a while. Zillow has responded on this matter, and according to the company, they have labor shortage, which is the reason for this decision. They are talking about the labor they put in for renovating the houses once they buy before selling them. This does not fit well because Zillow's competitors are still going ahead in the market with full coverage. The labor shortage is out of question here. iBuyers has access to huge amount of data and they usually predict the market movements months before. So it's pretty shocking and suspicious that Zillow didn't see this coming. And as per recent updates, Zillow has listed a lot of their homes for selling at a very low price in Phoenix, Arizona. To be more precise, 93% of the homes listed recently for sale are at a rate below their purchase price. That's an alarming piece of information. As a real estate company, Zillow must have already bought the homes at a 10 to 20% reduced rate from the market value so as to ensure profit. So now when the homes are listed at a price lesser than that, means the US housing market is really going through a distressed time, especially at Phoenix, where normally housing market is a boom. It is also interesting that Zillow had reported 1.5 billion revenue through its iBuying in the first half of this year. As the economy doesn't believe this excuse, Zillow's share prices have decreased up to 50%. At the same time, Zillow being a big buyer in the US housing market, their pulling back has further intensified the demand issue in the market. Zillow's decision to halt can be taken as a micro indicator that the housing sector is an issue. If we look at the numbers, the housing sector normally has an appreciation of around 10 to 20%, which has slowed down. 1.5 million houses were in mortgage forbearance during the pandemic. A majority of these might be coming back to the market due to foreclosures. This means the inventory in the market is going to increase suddenly, that is the unsold housing units, which will surely cause a decrease in appreciation of home values. The inflation rate in US is also increasing, which means the borrowing costs are gonna increase. So again, buyers are gonna pull back. The Federal Bank of America normally takes precautionary actions on such scenarios, which they have not done yet. If they would have increased the interest rates few months ago, it would have caused the borrowing costs to go up then. This would have led to US housing market to cool down about 5 to 6%. After some time, the demand would have come back with a corrected housing market with increased prices, which won't be that much of an increase considering the low it went through. However, the Fed didn't do this and now the market is going through an out of control shift. In a much broader perspective, the housing market does look shady now. There is absolutely chances of a market crash as the demands for homes are going to go really low for some time, at least for the next 6 months. Zillow pulling back an increased number of foreclosures will take a toll on the home values. At the same time, inflation rate is scary and the middle class has not bounced back to their financial prowess. All these factors are going to have an impact in the housing market and we better stay careful. Now guys, if you want to understand how Evergrande could crash the Chinese economy in the coming year 2022, then dive into this video immediately.